Hello, good afternoon. You're tuned into MF Corner on CNBC TV 18. I'm Vinny Motiwala, with me Sonal Bujwa as well. Sonal, today we're going to be putting the spotlight on, or it's much needed, right? The AMFI data that's coming. Interesting points and numbers coming in there.
Yes, this time was different in a lot of ways. We continue to see record high SIPs, but other than that, there was some interesting data that we want to talk about. Equity inflows, they declined by nearly 19% in October, falling from 30,405 crore rupees in September. However, despite the moderation in flows, the mutual fund industry's total assets under management climbed to an all-time high of 79 lakh crore rupees after around 75 lakh crore rupees in the previous month. Meanwhile, SIP contributions also touched a record high yet again, 29,529 crore rupees during the month. So, is the Indian mutual fund industry showing signs of overheating or excessive froth? What is the outlook going forward? Which are the categories which are seeing a lot of interest coming by? To break down the data and understand the trends in detail, we are now joined by Prableen Bajpai, who is the founder of FinFix Research and Analytics, and Suranjana Bodhakur, the head of distribution and strategic alliances at Mirae Asset Investment Managers. Ladies, good afternoon. Thank you so much for joining in. Some interesting data points that we saw in the monthly update that came by. Suranjana, let me start with you, because we did see equity mutual fund inflows. They've fallen from over 42,000 crore rupees in July to just about 24,000 crore rupees in October. What's behind this moderation? Is it valuation fatigue, profit booking, or we're just seeing some seasonal slowdown and this could reverse?
Yeah, good afternoon, Sonal, and good afternoon to all your viewers also. So I think, what has happened is, if you see, largely the numbers actually look like there's a large moderation in this month, which is like, it has come down to a net flow of about 24,000. But if we look at the data a little closer, the gross inflows have been quite stable. What has happened is probably the net numbers have come down because there's some amount of redemption which has happened, which is perhaps because, there's some amount of profit booking which has happened, and also maybe investors are taking a little more cautious stance since, the markets have been very range bound. In fact, if you break down the numbers further, you actually compare to the July numbers of 42,000. But if you see the 42,000 number, then about 10,000 crores almost out of that was in sectoral products, which actually was inflows through about 7 NFOs that had happened at that point in time, which attracted about 7,000 or 7,500 crores inflows there. I think to a large extent it's a good thing that some amount of this has moderated. The sectoral inflows have become more prudent from a client point of view. I think last month has probably seen the largest dip when it comes to the large cap category in net flows. But again, if you look at the gross numbers, they have been very stable in the large cap category itself. What has also happened is probably flexi cap has become a category where there is more interest from the client point of view, because it's also a diversified exposure when it comes to equity, and rightly so. I think overall, if you see, there has been some amount of probably profit booking, some amount of liquidity also being sucked out, because some amount, all these IPOs which have been coming, there's been a lot of interest around these IPOs. I also feel that maybe, October being a festive month, there could have been also some cash flow requirements, which is where people might have put in some redemptions to use this money. But I think overall, I look more at the SIP numbers, and that remaining intact is an encouraging story.
Absolutely, that's an encouraging story there. Prableen, now coming to you, any thoughts on equity mutual fund inflows or anything you would like to add over there? And obviously SIP contribution, right? Because like even Suranjana is mentioning, right, that's an interesting number that has been and hit that record high again, 29,500 crores in this month as well. Does this also somehow show that retail investors are now structurally disciplined and less swayed by these short-term volatilities?
Absolutely, Vinny. I think first on the overall flows, so I think just like the markets, there has been a bit of volatility in the inflows as well, and I think we've seen worse. We saw levels of 19,000 inflows into equity in May, and I think it's improved from there. overall, I think we aren't bad if we're looking at the overall financial year point of view from April till October end. So there has been a bit of reallocation, I think, within the categories, so moving out bit of maybe equity into gold, and we've seen a rise in the hybrids as well. And of course, SIP numbers, I think, which are the true representation of the retail investor interest, that definitely remains very strong and robust, and that has continued to move up in a linear way. So that is a very, very encouraging, and I think the SIP book has more than doubled in the last 3 years, and that's an amazing thing. In fact, another encouraging trend here has been that the SIP stoppage has also gone down this month in October. So there has been a dip of about 2% there. It came down to 74.85% from 76.27% earlier. So overall, I think investors definitely are showing maturity. Winnie, I think they've understood that staying investing during times when markets are volatile is what will reward them in the long term, especially as an SIP investor. And I think that is what so many investor initiative programs, channel like yours, have always focused on to get this message across. And I think the numbers are definitely speaking of that it has happened to quite an extent. And I think the retail investors, with this continued sort of inflows, I think in the coming the part of the financial year as well, I think we should continue to see decent inflows via SIPs.
Okay, we take that point. The other point was the overall AUM crossing 79 lakh crore rupees. So Ranjana, let me come to you on this one. Are we looking at a sign of long-term depth in India's mutual fund industry, or is it a phase where we could see some fraud, because it has continuously been going higher, and of course that will happen because there have been so much addition in terms of assets as well to the industry, right? But what is this indicating currently?
So I think when we look at the mutual fund AUM today, actually we are at a very, very decent stage. I think fraud would be too early to call it, because what has happened is the depth of the industry is increasing. The participation of investors is increasing. If you look at the household participation in mutual fund in India, also equity in India, it is actually very shallow at this point in time. There is a long way to go in terms of financial inclusion, in terms of investor awareness. We are at that starting phase. So I think we are just, the 79 lakh is really a very small representation of it. There was a report from AMFI where they were talking about how, as a percentage of GDP, mutual fund is still a very small pie, and we are looking at moving this towards, like all developed economies, moving towards probably closer to 100% of the GDP. That's that's the kind of number we should look at probably. But I feel that the structural story has begun. What is happening is probably, the financial awareness, as Praveen also pointed out, that, the income levels are coming up. People are actually looking at investing. People are looking at, digital access has made it a little easier in terms of really learning about this segment, and people are not absolutely close to the idea. I think we are moving from an investor base which is shifting from a saving mindset to an investing mindset. So there is definitely a long way to go, but we are at the starting point. But as Praveen mentioned also, I think the SIP book structurally increasing is very encouraging. If you look at that FY 23 to 24 number and compare it to 24-25, there was a 45% increase in terms of the inflows through the SIP route. And this year, if we see, we actually are almost at a 70% of last year's number already in 7 months' time. So looks like we will be far exceeding last year's number as well. So I think we are well on track to make this a long-term story. More inclusion, the better it is. More people experience this particular product and this route of investing. I think the acceptance of it is also increasing.
Absolutely, so Ranjana, important points made there by both of you all. But on that note, we're actually going to slip into a very short break. But after the break, we're going to continue the discussion on all these AMFI data points that we have coming in. So stay tuned and for that conversation, viewers.
Welcome back. You're still tuned into MF Corner. We still have with us Prableen Bajpayee of FinFix Research and Analytics and Suranjana Borthakur of Mirae Asset Investment Managers. We are discussing the AMFI data that came back for the month of October, and we saw a lot of trends, and one of them was the sharp drop in large cap fund inflows from 3,452 crore rupees in October to, that was last year, to just 972 crores now, while mid and small cap categories continue to attract around that 3,000 to 5,000 crore rupee every month. Probably let me come to you first. What do you think is going on here? What is on investors' mind? Are they ignoring valuation risk, chasing performance? Because there was a point in time we could only talk about mid caps and small caps, and then there was this SEBI proposal to see and do a stress test. Can you give us a sense of what's happening in this particular space?
I think let's talk about the large caps first, Sonal. So I think for large caps, there are many other competitors, and I think flexi cap space is one of them. So while we've seen this drop in the large caps, but I think parallelly we've seen this rise in robust numbers coming into the flexi cap space. And what we broadly analyze that majority of the flexi caps are large cap oriented. So with an allocation towards large caps, 75% and upwards. So I think maybe a lot of investors are finding flexi caps as a better alternative to large caps. I think that is one reason which is possible for the this fall and the change. I think overall, if we look at this financial year, since April to now October, large caps month on month actually have just gathered about 13,600 crores of inflow. Flexi caps, on the other hand, have actually got about 46,000 crores, which together makes roughly around 59,60,000 crores. And if you're looking at the small cap and the mid caps, they've been pretty steady, like you said, that 2,000, 3,000, 5,000 levels. They're moving in that range. So I think just like the markets, the inflows definitely into small cap and mid caps are moving into that range, which is robust. Again, to the tune of roughly about 29,000 crores overall for this financial year, each equally they've got. And I think so it will be wrong to say that they're just looking at the past returns now when investing, or are ignoring valuations to some extent, because if you look at the 150 index, for example, year to date, the returns have been barely just 6%. Last September till April, small caps fell by roughly 20%. So I don't think that now it's purely chasing performance. Perhaps to some extent, it is also that a lot of investors understand that when you're investing in the mid caps and small caps, continuity of your investment is very important. So I'm hoping that a decent amount of this is actually coming by SIP inflows with the long-term view in mind. So I would not agree that it's totally chasing the performance. It's hopefully part of their long-term portfolios, and that is the right way it should be, especially for the mid and small caps.
Absolutely, don't only chase performance. Hope it's a good long-term allocation, then that's a strategy that one could go about. But Suranjana, hybrid categories, especially in that, when you look at multi-asset funds, they have done well, good numbers coming in there. But on the flip side, you've seen balance advantage funds in the hybrid category, that's not doing that well, right, in terms of flows. What is it that you think? Is there some confusion, or do you think this is more of a tactical allocation? Now investors are becoming more aware of the pros and cons in different kinds of funds when they invest. How are you viewing this?
Yeah, I think, Vinay, if you see the hybrid category, a lot of the flows are actually, what is happening is it's tactical, or rather the flow pattern is being defined by the inflow in the arbitrage segment. That is probably a tactical allocation that people take, because whenever there is sideways market, whenever people are, building up assets towards, allocations when corrections happen, I think this category starts to see larger inflows. And but when you look at the categories like balance advantage and multi-asset, I think both the categories have been building up quite well in the market. I don't think that this, the numbers coming down a little bit in balance advantage has any concerns around it. It's just about the type of product that people are looking at allocating, and it so happens that this month there has been a slightly lower number in the balance advantage. I believe that multi-asset definitely is becoming a category which is very popular amongst investors. In fact, when I talk to a lot of distributors, they are looking at it as a solution product, and which is where a lot of new to MF clients are also coming in through this category. So if you notice, every month on month for the last 1 year or so, we've been seeing continuous upside in terms of the inflows in the multi-asset category. Also, I think to an extent, the fact that the gold and silver, the commodity part has an allocation in this, the returns have been looking quite decent. And I think in a year where equity markets have been sort of flattish returns have been coming out, I think hybrid has been a savior segment in a way. I also feel that for the distribution segment, probably hybrid products, especially products like MAF and BAF, are great tools to be able to manage the behavior of clients. The more I talk to people in distribution, the more I hear that clients are in a hurry to make money, and one of the biggest jobs for the distributor is to probably manage the behavior. And these categories give that option to the distributor as well as to the client to remain invested with allocation towards all segments. So I think the space is evolving very interestingly.
Take that point. And the other big trend that we always talk about, the NFO collections, they bounced back this time to 6,000 crores in October. They had slowed for some months, and the indication was maybe this could give some sort of reprieve to investors who were just going out there, mostly coming in sectoral funds actually. Are AMC's timing launches with market sentiment? Probably, let me come to you. And should investors even bother with NFOs when existing funds have long track records? We've discussed it in detail, but we still see so much money coming into NFOs every time they're launched.
Absolutely, Sonal. I think, two things for AMCs, they are definitely manufacturer of products. So they have to keep coming up with something new. And if it's not new, at least it's something which is existing, but it's not part of their overall offering. So I think we saw NFOs for gold, silver as well. And then at the same time, Sonal, we are seeing more and more entities actually entering the mutual fund industry. So we saw Geo, then the wealth company, Helios, for example, is now coming up with a small cap NFO, a capital mind flexi cap. So I think newer entities entering the industry, they're coming up with products. And of course, with big names like Geo, they definitely, for the flexi cap, they captured, I think, a decent amount. So overall, I think the interest is also built up by that, newer names are coming, which try and offer something new. But from an investor's perspective, of course, you don't have to jump on and, get into an NFO or have it in your portfolio. If it's already existing as a category, you can definitely look at some of the existing products. But I think a lot of investors find freshness when probably they're dealing or, looking at a new name or a new category, a new sounding category also in a way. So I think NFOs to some extent always create that buzz, and that is why we've seen this decent sort of AUM capture that they've been able to do during the month. But definitely for existing categories, I think try and invest in something which has already been there, or at least the AMC has a track record. But that actually helps you to understand how the fund management actually works at the AMC level.
Absolutely important points there, probably. Obviously there is a buzz that is every time created when you see a new NFO coming in. But Suranjana, now from here on, what do you think is going to drive the next leg of these mutual fund inflows? Do you think it's going to be rate cuts that could come in, or political stability, correction-led buying? How do you see this moving? And do you think retail participation will continue to grow through the rest of 2025 and 2026?
Yeah, I think we have to wait and watch. But I think what's important is the fact that, of course, rate cuts is a measure which helps in terms of having more money available in the hands of investors. There's also, with EMIs going down, it becomes more, more money which is available to them. Also, the fact that, when the fixed income opportunities start to probably give, especially FDs start to give slightly lower interest, I think the interest in this, equity segment starts to increase. So this will play a factor. But I think what has happened is, if you see the period in September 24 and 1 year before September 24, probably a very quick run-up of the market happened, and that point in time, the corporate earnings didn't catch up. So I think one of the things which everybody is watching out for is probably the corporate earnings starting to come back, and which is where there is more clarity around how underlying market itself starts to do. And I think also some clarity around probably the global events like the tariff war, if there is some more clarity around that, or for that matter, the Fed rate cut, if there's directionally more clarity around that. Those are things probably which will, trigger markets. Apart from the regular trends,
Take that point totally. Ladies, Suranjana and Prableen, thank you so much for joining in today with your insights on what happened in the month of October, and most importantly, what the outlook could be going forward for mutual fund investors. Well, with that, we'll do one thing. We'll wrap on this edition of MF Corner, but you stay tuned for Closing Bell to take you through the last hour of trade.